A new survey by a UCT research unit shows a big shift in the market share of cigarette brands following the 20-odd week tobacco sales ban. Now, apart from one well-known brand, Winston, most of the large international brands gave up market share to small brands, and all cigarettes are now pricier than before the ban. From UCT, Corné van Walbeek is with us, Principal Investigator of the Economics of Tobacco Control Project at UCT. Corné, good afternoon to you and welcome. So, apart from Winston then, a well-known brand, the other large international brands gave up market share to the smaller brands. Why was that?
Yes, so just to give you a bit of background, Jeremy, before the lockdown, our survey showed that the multinationals had approximately 75% of the market share, and during the lockdown, their market share decreased quite substantially. The survey that we did in June indicated that their market share had dropped from 75% to 20% or even less than 20% in that period. Subsequently, we see that their market share has increased to 66%, which is, of course, substantially better than it was during lockdown, but still substantially less than it was during the pre-lockdown period. And we don't have full answers, but we've certainly got some indicative answers as to why this has happened. And I think one of the main reasons is that people who were previously not exposed to the so-called local brands or the non-multinational brands were forced to use these brands during the lockdown. Many of them might have become accustomed to them, and they typically trade at a discount to the multinational brands. The other potential reason that some of our respondents have indicated is it's a form of petty tax evasion and a type of a petty tax revolt against some of the taxes that have been implemented on cigarette products in South Africa.
So when we talk about the move to smaller brands, are we effectively talking about those brands that operate under the radar?
So we can think about the South African market as having two primary components. The multinationals, which is three large companies, BAT, Japan Tobacco, and Philip Morris. And then there's a whole group of smaller companies that in the past have been very small, that became very dominant during the lockdown period, and that have subsequently, of course, become smaller again, but are significantly more influential and have substantially more market share subsequent to the sales ban. So we can think about it in those kind of terms. And there's not much love lost between these two major groupings. I've been part of discussions where it's very clear that, there's not much love lost between them.
I think you're being very judicious in your analysis of that. I think it's a lot more than that. What about price? I mean, people are just paying more for cigarettes now, aren't they?
Yes, so before the lockdown, there were significant differences in the price between, on the one hand, the multinationals and the local producers. And the multinationals were trading at a significant premium to the local producers. Many of the local producers were selling at prices that made it clear that the full tax had not been paid. So these are effectively illicit cigarettes. That doesn't mean to say that the multinationals are completely scot-free when it comes to tax evasion, but it was more obvious for the local producers. During the lockdown, the prices of all cigarettes shot up incredibly, up to 250% on average in our June survey. What was interesting for us is after the sales ban was lifted, the price of multinationals cigarettes increased by approximately 5%, and also the price of the local producers' cigarettes increased by as much as 30% relative to the pre-lockdown period. That, to our mind, was the single most interesting finding, that prices had actually increased subsequent to that. Of course, from a tobacco control and a public health perspective, an increase in price is good. From a fiscal perspective, the question that we cannot answer is what has happened to fiscal compliance and tax compliance by these companies. Are these companies now suddenly becoming more tax compliant, or are they simply making more profits? We don't know that.
Just a final question to you. Your survey will also give us an indication as to whether the cigarette ban itself was a good or a bad thing. These are the percentages I want to share with our audience. Of your participants, 9% successfully quit smoking. 22% of respondents indicated they smoked more cigarettes after the ban, 38% smoking fewer cigarettes. What do we learn from that?
It's a very nuanced picture, and it depends very much how one looks at it, and how important is it to get people to quit smoking. Of course, from a public health perspective, that is the ideal, and I think many smokers actually would want to quit smoking. So for many, or for a percentage of smokers, the ban was a good thing. It created that incentive for them to quit. They hung in there, and they are still quit at this moment in time. A number of or about half of our respondents indicated that they have started smoking again after they had quit during the lockdown period. And that would be a shame both for themselves, presumably, and also from a public health perspective. From our perspective as economists, we believe that the extension of the ban past the first 5 weeks was probably not in the best interest of both the country and of the whole environment. The government lost a substantial amount of money during this period, but more importantly, we believe that the sales ban has actually entrenched the illicit market in ways that previously may not have been developed to that same extent.
And probably testimony to those findings, Corné van Walbeek from UCT, is the fact that nothing was tampered with in the latest round of regulation changes. He's principal investigator of the Economics of Tobacco Control Project at the University of Cape Town.